What do you mean by the recovery story has begun? Dan Ives, managing director of Wedbush. The Tesla comeback story. Is a comeback necessary? They had tremendous obstacles in China, and now we're witnessing the resurgence, so I believe it did. With Q2 deliveries coming up next week, I believe that some of the worst things we have witnessed in China will finally come to an end. In China, a small recovery is beginning. Naturally, Robotaxi Day in August marks the beginning of Musk's comeback kid narrative. This stock is going to have a huge run in the second half of the year, in my opinion. Global demand for EVs has obviously been weak, but China is the main source of the problem. China was a huge tailwind for years before turning into a headwind, but now that those price reductions are ending, Brian, you're beginning to notice stability. Demand from China is beginning to pick up steam, and I think the stock is telling you. And we think next week is just another indication of it, that Musk's darkest days are behind him. According to Tesla analysts, a number of strategic actions by the company, such as their creative strategy of increasing demand through financial means rather than direct price reductions, might result in a notable increase in the value of Tesla stock in the second half of 2024. There are many aspects of their possible market influence to consider. We'll go into great detail about the much-anticipated robotaxi event on August 8th, which has the potential to revolutionize Tesla's revenue sources. In addition, we will examine the overall state of the economy, including changes in interest rates and the possible outcomes of the next presidential election, including the possibility of a Trump administration. What potential effects might these have on Tesla's stock market performance? Come along as we dissect these dynamics using in-depth data insights, professional viewpoints, and a market trend analysis that may pave the way for Tesla to have an incredible second half of 2024. This episode is full of insightful information, regardless of your level of experience as an investor or your general curiosity about Tesla's future. Please remember to tick the like and subscribe buttons before we continue. Let's get started. This is Tesla stock news. Leading Wall Street analyst Dan Ives recently predicted that Tesla's stock would see a significant increase in the second half of 2024. The release of Tesla's second quarter delivery figures on July 2nd, this coming Tuesday, is crucial to this forecast. Despite closing somewhat lower, analysts have noticed a spike in the stock's performance as it broke through key resistance levels and temporarily above $200 per share last Friday. This recent surge indicates that investors are becoming more confident that the Q2 results could be impressive and could spur additional gains. Let's now explore what lies ahead for Tesla. Other significant changes are expected in addition to the immediate attention on the Q2 delivery figures. Significant strategy advancements are anticipated at the robotaxi event on August 8th, which will provide insight into Tesla's future plans. According to Wall Street's expectations, this event could push the stock further higher. It's crucial to keep in mind, though, that Tesla hasn't had a great first half of 2024, with price reductions and lower delivery rates. However, the second half looks promising due to possible loan rate reductions that would increase demand for Tesla automobiles generally. Beyond Tesla, the larger market dynamics are also very important. With the exception of Tesla, major tech companies have been the main drivers of the S&P 500's gains. With significant EPS growth anticipated in 2025, a general market rally may be especially advantageous for Tesla's stock. What do you think will happen to Tesla in the upcoming months, viewers? Do you think that Tesla's performance will be supported by the larger market trends? Let's talk about how these changes might affect the market environment. Please share your ideas. Keep in mind that next Tuesday's Q2 delivery data will be the real test. It is anticipated that Tesla would beat Wall Street projections, which could significantly boost the stock. Watch how Tesla's stock reacts in the next days, as it may reveal whether the anticipated surge will come to pass, especially as the robotaxi event in August draws near. The performance of Tesla's stock will surely be impacted by a number of factors as we move into 2024, including the Federal Reserve's policies and general economic conditions. Would EV be considered a Trumpy portfolio firm if Trump were to win and remove some of these financial incentives? Yes, I would say. I mean, Trump PR Musk. A Trump administration would ultimately be bad if Musk gets more front and center. That's optimistic for Tesla, especially if you start to see those EV incentives rolled back. Negative for the industry, positive for Tesla. They are in a huge position of strength, so I believe it is bullish for Tesla as more indications of a Trump presidency appear. Diversifying the market's attention away from the dominating tech titans, known as the Mag 5 or Mag 6, which include firms like Apple, Nvidia, Google, and Amazon, would be a more advantageous situation. Notably, these companies have already suffered significant profit-taking at the closing of the first half of the year, indicating at possible adjustments in market dynamics as we progress. The less hopeful prediction, though, is predicated on the recession's imminent threat. If economic indicators begin to falter and rapidly deteriorate, the consequences could lead to major market disruptions. This is especially troubling given the strong earnings per share increase of about 15% anticipated in 2025, a goal that could be difficult to achieve in a difficult economic climate. We might see significant market capitalization devaluations in such a situation, especially if the recession is more severe and lasts longer than first thought. It's vital to note that economic data from official sources and financial institutions typically come with a delay, meaning the market's reaction could lag behind real-world economic movements. Nonetheless, the observable financial well-being of people and companies frequently offers a quicker, albeit anecdotal, clue to underlying economic strains. These real-time observations can occasionally present a radically different image, indicating strain that is not yet apparent in the more comprehensive economic statistics. It becomes crucial to keep an eye on both the official economic data and the financial reality at the ground level, since these factors collectively influence the market environment. The intriguing thing about this is how it fits in with the election season. Perhaps as a result of government initiatives, historical trends indicate that major downturns are generally avoided during election years. Therefore, although there may not be significant changes in the near future, the underlying economic stresses may become more apparent after the election. Regarding the overall market, if there are declines in large tech stocks like Apple, Amazon, Nvidia, and Google, we may witness a more widespread market rally as capital starts to move into other industries. This scenario would indicate a shift from the concentrated profits in big tech to a broader distribution across diverse industries, potentially contributing to a healthier overall market dynamic. An important pattern always shows up when we examine past market patterns during election years. The markets often undergo a substantial correction, with an average of roughly 13.3%. This year has been unusual, though, as there has only been a 5% correction thus far. This sharp divergence from past trends suggests that a more significant correction may be imminent, especially in the industries that have propelled the market to almost all-time highs. The technology industry, particularly the large players known as the Mag 5 or Mag 6 stocks, is most likely to be affected by this anticipated correction. These equities, which include some of the most well-known technology companies, have helped the market rise but now seem most susceptible to a decline. Given their recent quick rise and high valuations, these equities have a strong risk of experiencing negative developments. It's interesting to note that Tesla's stock appears to be more resilient to future declines. Its present price, which already accounts for some of the most negative eventualities, may be the reason for its resiliency. However, companies like Nvidia, Apple, Google, and Amazon may not be as well positioned to withstand a downturn in the economy. Looking ahead, the latter half of the year shows promise for Tesla, especially with potential increases in margins and a rise in demand predicted in 2025. The robotaxi to boot, which will become clearer on August 8th, is an important event to monitor. This invention may have a significant impact on Tesla's performance in the market. Analyst Dan Ives' suggestion that Donald Trump would run for president again is fueling market speculation. If Trump were to have another say in monetary policy, his past position on rate cuts may create a more welcoming atmosphere for companies such as Tesla. Market expectations are already being shaped by the expectation of such a president, which may help Tesla's stock in the near future. Given all of these factors, it appears like Tesla has a bright future in the second half of the year. Corrections may occur in the larger market, especially in the high-tech industries, but Tesla is well.